Hello, everyone. Welcome to this online webinar on scenario and what-if simulations, brought to you by XB4 Consulting. My name is Baudin Galayev, and I'm partner at XB4 Consulting. At XB4, we actually focus on improving the business performance of our clients. I invite you to visit our website to learn more about who we are and what we actually do. So this webinar is recorded and we will be happy to share it with you at the end. We have also foreseen around 15 minutes for Q&A at the end. So depending if you will have some questions on that. I suggest we start then, but I would like to give some contextual information related to the material used for this webinar. I will present you an application we have built in board software to demonstrate different topics related to the overall corporate performance management. So board software is actually a decision-making platform which covers the different areas of corporate performance management. In this specific example, the application is about a fictive company we called X-Bike. And X-Bike is producing and selling bikes and other products related to bikes. Let's directly maybe see how it looks like from the board perspective. So you see the logo of X-Bike and you see a very general menu here where we have different sections and different applications. So obviously today we will be focusing on the last one, simulations, but please note that we have also foreseen admin, where we try to manage our overall administrator settings, security rights, and so on. We have a portion for reporting. We have an application as well for the long-range planning with the workflow. So board is also very flexible in terms of application. We can start from the scratch and design a very customized workflow. So to give you an idea, for the long-range planning, we made the workflow in the following with the following design and with the following process. Yeah. So we have as well budgeting application with a completely different look and feel. Similarly, we have the forecasting module. And finally, we will be focusing on this specific application called simulations and what ifs, where we have our also specific workflow that we have designed. So we'll be starting with the top-down simulations, very high-level simulations on the P&L directly to see how we can simulate directly from the P&L perspective. And then, of course, for some of the P&L lines, we can go deeper and use driver-based techniques and other budgeting and simulation techniques to focus more on specific lines. So as net sales, gross margin, OPEX, capital expenditures, and other. And then we will focus also, of course, on balance sheet assumptions to get finally to our balance sheet and then to our cash flow. And finally, we will summarize in our simulation summary with different scenarios. So before starting, what is important to take into mind is that every good simulation starts with a clear understanding of the drivers. And drivers can be actually both external and internal to the company, so which are actually impacting your business performance. So once we capture those, we could move forward and simulate different future outcomes of these drivers. Therefore, initial analysis is very important. And we should also ask our different questions. So for example, what if energy prices will rise or fall in the coming months, quarters, years? What if second wave or even third wave of this pandemic will occur? Does my business have enough liquidity to survive? Are supply chains likely to remain intact due to the pandemic? What will be the future of country Z look like, etc., etc. Yeah. So in order to demonstrate you that, I will, before even starting the simulation, I will go first to the reporting section of this application. and just start with the variance analysis. So before starting, please note that we, for this specific demonstration, our reporting month is April 2020. So we have our 4 months of actuals already available, and I want to have a quick analysis on the variance of the P&L. So for those of you who have never have experience using the board software application, I will maybe start to shortly describe what you see on the screen. So on the left hand side here, you have a section of different filters and selections. So we were speaking that we will discuss on the X bike company, which is producing and manufacturing and selling bikes and all the related products. So there is an automatic filter of the year, so based on the admin settings, as well as automatic filter or selection of the latest reporting months based again on the admin settings, where we specify what is our current reporting months, which of course we can easily change to another month, and also the year we can easily change to another year. But to make it more user-friendly, we open the screen with the relevant selections. Then you have, of course, legal entities. So we have 12 different legal entities for this specific company. We have different departments, such as legal, finance, HR, manufacturing, and so on. We have customers. We operate, Xbike is operating through different channels as well. So we have also e-commerce, major accounts, distributors, retail. And we have also some main product categories such as components, clothing, bikes, accessories, and so on. So when looking now in the menu of the screen, you'll see that we have 3 different tabs. We will start with the first tab, which is called variance. And here you'll see 2 tables. So the first table on the left is showing you the monthly variance versus last year and versus forecast. Based, of course, of your selection. So currently the month April is selected. So it gives you a monthly variance of April. And on the right-hand side, you see, based on the same selection of April, you'll see the same variance, but on the year-to-date basis. Again, versus last year and versus forecast. And underneath, you can see, for example, in a visual form, what is my variance versus forecast and versus last year of my net sales, of my gross margin, and of my EBITDA. So now I want to start my analysis before jumping into the simulations. So what can I already collect from this perspective? So April year to date, I see a strong decline of my net sales versus last year and also versus my current forecast. So actually, also maybe before starting, we are currently what we call here the current forecast is actually the forecast 2 plus 10. So we made our forecast 2 plus 10, which contains 2 months of actuals and then 10 months of budget. And now the purpose of these simulations is that we try to come with different simulation scenarios. And at the end, once we agree on one of the scenarios, we will try to use it for our new forecast, which will be 4 plus 8, because we have anyways already 4 months of actuals available. Yeah. So going further, we see indeed our net sales are decreasing 19% versus last year. We see approximately the same trend for our gross margin, minus 20%, which already tells me that from the cost of goods sold perspective, or from the profitability even of my gross margin on net sales, I will not have big impact so far. So we can also look at it from the P&L perspective, and you can clearly see here that my cost of goods sold have approximately evolved in a similar manner than my net sales. Yeah. So which means that my gross margin in terms of net sales as profitability will remain constant. We can be quite sure. However, when looking on the EBITDA side, we see even further decline. So minus 35% versus last year. So that's already important. So I know that my fixed cost, I need to dig deeper into my fixed cost to understand what's happening in there. So if I switch to the second tab, I see my evolution by months, both of my actuals last year, of my forecast, and of my actuals of current year, which shows us from February, shows a very strong decline here. And you underneath, you see the same visual representation, but now instead of having it year to date, I have a very monthly evolution in bar charts. So again, you see both for net sales, gross margin, and EBITDA, as from March, we have very strong declines, which demonstrate the pandemic that really happened. So we try to use indeed some real figures here. Moving to the next slide, I want to understand more the evolution of my top line from the top line perspective. And here I have the variance both of my countries, different countries where I sell the products, and also of different channels. So when looking first on the countries, I see that my overall April year-to-date performance was minus 23%. Okay. Minus 23%. And then when looking at the evolution country by country, I can see that the impact of this pandemic was different depending of the macroeconomical factors as well of each country. So we can clearly see here that, for example, Germany and Switzerland have been less impacted for the April year-to-date basis than Southern Europe, for example, Italy and Spain. So that's also some important elements of my initial analysis that I need to take into account before starting my simulation. So on the same side, let's look on the channels, how my channels did perform during this April year-to-date period. So I see again the overall performance of the top line was around minus 23%. And then when looking at the channels, I see that except for e-commerce, the rest have been significantly decreased, and I have still a positive growth of my e-commerce channel. So that's also an element that I will take into account. So moving forward, let's look then on the EBITDA composition, because we wanted to see which specific fixed costs were driving actually our EBITDA profitability down. So here again, we can clearly see the visual on the top, which we're already familiar with. We have a decreasing sales of current year as from March. And when looking underneath, we have a visual representation of the EBITDA value tree. And here, again, when looking at the light purple color, it tells us actually the variance versus last year. So let's focus maybe on this one. And let's also start maybe from the net sales. So we know already that for the April year to date, the net sales compared to the last year have decreased minus 19%. And we also see that the cost of goods sold have decreased approximately in the same manner. So meaning that my gross margin is decreasing minus 20%. However, my EBITDA is decreasing minus 35%. So we knew already from the previous analysis that something happened in my fixed cost perspective. So when looking at these three categories here, I see indeed that my sales and marketing expenses have decreased by minus 7% compared to my top line. So there already I see some issues that I can already take into account. My personnel expenses have even increased by 9%. And finally, my general and admin expenses have also increased by 23%. So which means that that gives us a very high alert, we really need to see what's going deeper. We need to control that, because if we want to ensure, for example, if our purpose of the business purpose of the simulation is to ensure a specific profitability of the EBITDA, which we need to keep constant. That can be a constraint, that can be a requirement. These are important elements to take into account to ensure that. And visually here, you can even see the chart of the EBITDA profitability as percentage of net sales. And you'll see that for the current year, I lost already 4 percentage points versus last year in terms of profitability. So from 21%, I fell down to 17% for the first 4 months of this year. What can be also interesting is, as we see it here, that my profitability, actually my top line starts to decrease as from March. It could be interesting to see what's happening on the monthly basis. And in board, you can simply drill down from the chart as well by just double clicking on a specific element that interests you. And here, for example, you'll see on a monthly basis how my EBITDA profitability is evolving. And you can see that for my current year, my first 2 months are almost in line with my forecast. But then as from March and April, I have indeed a very strong decrease here, and specifically for April here, 8.8% compared to the almost 23%. So another questions to ask for simulation is, what will happen if that indeed continues to fall down, and then I come up at the end of the year with a negative EBITDA? Would my business survive? Would one of my legal entities survive? Would I have enough liquidity to pay different invoices? So that's an important element to take into account. So for this purpose, let's stop indeed to this level of the analysis. So we made a very quick high-level analysis to show you the purpose, and then let's start actually our workflow of simulations. So let's start with a top-down simulations. So again, for top-down simulation is really we are showing the full P&L perspective, and we try to generate different simulation scenarios. Yeah. So currently we have created four different scenarios, simulation scenarios, which we call reference, V-curve, L-curve, and U-curve. So for this specific example, we try to be as realistic as possible with the current pandemic we face. So the V-curve scenario is actually, if you look at the top line evolution, it might be a V-curve. So it would mean that, in other terms, that we will have a very quick recovery. So we had a very strong fall in March, April, but then we will have a quick recovery afterwards. The U-curve means that it will take a few quarters to recover, so it can be a mid-term recovery, while the L-curve, that's a more longer-term recovery. So we can maybe see back our results pre-crisis in mid-21 or somewhere at this stage. Okay, so what we have also on the right-hand side here, we can create and manage our current simulations scenario. So I can, if I'm not satisfied with these four scenarios, I can create another simulation scenario, or I can even change the description of an existing scenario. So if I take the reference, I can here edit my description and change it if I want. Yeah. So and what you see also here on the screen, it's a very quick setting that allows you to copy and generate a new simulation, so that you don't start from the scratch, but you try to already populate your newly created simulation scenario. So we have different options. We can either copy forecast, we can copy the data from the previous forecast. We can either copy from the budget, we can copy from last year actuals, We can copy one simulation scenario to another one if needed, or we can also even clear a scenario. So for the purpose of this demonstration, let's look at this reference scenario, and I want to clear it first. So I will click on the action go. So there is a quick procedure behind the screens which clears my scenario. And now I want to copy my forecast, which is my current forecast, which is 2 + 8, just to demonstrate you that the values will be completely equal. So let's take the 2 + 10. Okay. So now you see indeed that my values for my reference simulation scenario is completely equal to my forecast. However, since the purpose of this scenario simulation is to come up at the end of my simulation analysis to a new forecast, 4 + 8, because I have 4 months of actuals available, I will try to update it based on my 4 months of actuals. Yeah. So I will click it again and take the 4 + 8. And here my new reference is updated. So you'll see now slightly different figures. Please note that there is all the dimensions which are behind are copied as well. So if I take, for example, the gross salaries behind, all of this has been updated as well. So if I'm looking on a department, for example, manufacturing, and I look at from the months perspective, for example, you can clearly see that with my forecast, my first 2 months are equal, so equally copied. Then I have my new months of actuals for March and April, which are obviously different with my current forecast. And finally, I have the rest, which is equal to my latest forecast. Yeah, so that's how it's copied. So I can drill down at any dimension I want, but I just demonstrate you that everything has been copied in a correct way. Then if I go now with, I proceed with my top-down simulation and I select, for example, the reference simulation version. Here I have the possibility to directly update my P&L for this scenario. And here you have different options. Either you update the values directly from this perspective, so you update the values. So instead of 240 million, you can say that it can be 235 million. And you'll see automatically that I have also my percentages versus actuals last year, versus budget, and versus forecast, which have been current forecast, which have been updated. Or alternatively, I can directly maybe change specific given growth percentage. So imagine versus last year, I want a decrease of -5%. So I can do it also this way. So let's say that I'm satisfied with this value. I will save that. Important element also is that since we are working with a future 4 + 8 forecast, we also made sure that there is an automatic lockdown of my available months of actuals. So to demonstrate that, I will drill down here net sales at a month level, and you can, as you can see here, my 4 months of actuals have been locked, so I cannot make any input in there. That's important to take into account. So any input at a higher level will proportionally adjust the rest of the months, but these first 4 months will be kept constant. So if another functionality, for example, if I drill down further at a month level, I have here a view of my different product categories, and I can either directly change at my amount at a total level here, or I can even say I want to lock my components because I'm happy with this value. And for the rest, I want an increase of 2%. So I just type increase 2%, and these values are automatically updated. So I will save this result. Even if it doesn't make sense for specifically from business-wise, I'm just demonstrating you different possibilities of input in board. So the purpose of the top down is that I made a very quick high level adjustments at my P&L level, and then obviously for specific lines I need to go deeper into driver based logic maybe, or in some details. So I will then go to the more details if needed. So I can start with my net sales. So before starting, maybe to avoid your confusion on the screen, I will maybe quickly explain you what you see on the screen. So on the left hand side here, you see, just for the reference as a baseline, you will see the variance, the monthly variance versus last year of my different channels. On the right hand side, you see the input of my net sales, where indeed I need to make the input for all my simulations for net sales. So you have the scenario reference, V curve, L curve, and U curve. And by the way, you can also visually see them on the screen. So for example, if I look at the V curve, as explained previously, I expect to have a very quick recovery in form of a V. When looking at the L curve, it will take more time. And when looking at the U curve, it's a moderate, so it will take maybe 1 quarter to recover. So I have my visual presentation here, and finally on the bottom right, I see for my different simulation scenarios, I see my yearly net sales currently. So of course the values have been already pre-populated, but we can of course change the input if required. So let's look, for example, at the e-commerce, because what we learned from the analysis phase is that we've seen that e-commerce was impacted, but still had a positive growth. And you also see that as from April, actually, even if the rest is decreasing, we have the e-commerce growth is increasing compared to the March. Yeah, so from we have a even stronger growth, 76%, while in March we had a growth of 49%. So we can take that into account to make our adjustments also on the right hand side. So for e-commerce, for example, I see for my reference a growth of 9%, while for V curve I see a growth of 4%, and so on. So that's for me. So taking into account the latest actuals here, I might change that. So let's maybe directly change it. So for my V curve, I will directly update it to 46% growth for my e-commerce. In a similarly manner, I will update my L curve to 23%. And for the U curve, I can keep it to 30%. Okay, so I will save these inputs. By the way, you can also make your adjustment at total level if needed. You can lock different elements as discussed previously. Or you want also to make some inputs at the country level, because we've seen that some countries were impacted more than others. So to do so, we can use actually the board tables have the same feeling as the pivots. So we can just change the pivot by clicking here on this small icon. I have my rows and columns. So instead of having sales channel in my rows, I will just prefer to have it now by country. So I will remove sales channel, and I will do the similar operation to my right table. So I will put my countries in the rows, and I want to see at this level. So again, when looking at Germany and Switzerland, they have been indeed impacted, but there is still compared to the other countries, it's less significant. So when looking now here for Germany and Switzerland, I see, for example, that Germany have still here for my L curve scenario a very pessimistic growth for the full year. So I might change that as well. So I would put that to 10%. And for my U curve, I will put it to 15%. So I'm happy with that. I will save my inputs. and my net sales are looking like that visually. So it ranges from, on a yearly basis, of course, it ranges from 157 million for my L curve scenario to the maximum of 235 million for my reference simulation scenario. So I will be moving back to my gross margin. Moving forward, sorry. And here we want to demonstrate you the driver-based possibility. Of course, you can plan your cost of goods sold and gross margin in different manners. And here in this specific demonstration, we want to show you maybe how you can do it from the driver-based perspective. So here we have again the similar look and feel. So underneath you have the visual representation of your inputs and the outcome. And in this specific table, you have as a reference again at for each channel the profitability, the gross margin as percentage of net sales for the full last year, for the actuals year to date of the current year, of the current forecast. And here we can also now make the right adjustments for the rest, for my 4 different simulation scenarios. And finally, you have your outcome of the gross margin, which is visualized on the right side of the table. We've seen in the analysis that the current pandemic didn't really impact much the gross margin profitability of X-Bike. So therefore, I'm quite conservative. I already made the inputs here in a quite conservative manner. So you'll see that, for example, for my accessories, the profitability variance is maybe 2 percentage points and not more. And of course, you can document all the assumptions you made because of that. If, for example, the supply chain has been interrupted and your suppliers are increasing the prices, if there are any assumptions for your future outcomes, you should document that and make the right inputs accordingly. So let's say I'm happy with that, or I can, okay, let's for the purposes, let's have an input here of 51%. I will save that, save my input, and calculate directly my cost of goods sold and gross margin in terms of value. Since it's a driver-based exercise, I need to calculate and feed my cost of goods sold. Okay, so I have now my values refreshed here, and I have a very short P&L, which you can see here. So when looking now for each of the scenarios here, when looking at my gross margin percentage of net sales, I see that it's varying between the range of 31.8% and 33.6%. Okay, so we can move maybe to the operating expenses now. So for the operating expenses, we decided to use another possibility of planning, forecasting, budgeting. So one of the ways is we have illustrated a flow. So we have 4 different tabs. So in the first tab, we will just try to see all of our operating expenses, and we will try to specify which of them is variable and which of them is fixed. We can, please note that we can also do it in terms of the percentages. If, for example, one of the specific reporting line includes a lot of different GL accounts and some of them are maybe variable and others are fixed, we can also do it at this level. But we thought that for the simulation, we can go at a higher level. So by just making some ticks like that, we can already specify what is variable and fixed. Alternatively, we could also specify based on the percentage. We could say that around 50% of this reporting line is variable and the rest 50% is also fixed. So that's another way of doing it in a very high level perspective. Yeah. So I made my specification here. So I indicated which of the reporting lines within operating expenses are variable and which are fixed. And I will apply different logic now for these 2 types of my expenses. So for my variable OPEX, I will apply another driver-based technique. So based on the percentage of net sales. To do so, I have my reference or baseline, which is on the right-hand side of the screen, where you can see the percentages of actuals prior year. You can see the budget, you can see the current forecast, and you can even see also my actuals year to date, so April year to date. So I made some adjustments. I can correct, but I will keep these adjustments, and then I can move to the fixed OPEX. And here I have the possibility actually for all of my fixed cost category. I have also an I have also here let's say a reference. For example, I can copy my current forecast reference of my fixed cost. I can paste it to my reference here. And then if we expect another indexation of a given percentage, we can also apply that. So I can say that for all of these lines, it will be similar. And for the rest, I will apply another indication index of 1%. So, and now I will save this result, and I will be, and for my simulation reference, that would be enough as fixed cost. And finally, I can look at my total simulated OPEX. But before doing that, of course, I need to calculate and refresh, because I've been using so far different driver-based techniques. So I need to update the values. So there is a procedure behind which is taking that into account. And finally, I have my simulated OPEX appearing here on the left table for each of the scenarios. And you have again a visual representation underneath in forms of a line chart. So next we will move to the CapEx. Again, Board is a very flexible platform. You can plan your simulation at a granularity level that you like. So you can be very deep into the details, or for the simulation purposes, you can do it at a higher level. So it all depends of the trade-off between if you want it very quick or you want to be in very details. And but at the end, we are planning something for the future. So I think it's better to take the right balance, the right trade-off between the two extremes. In this case, for the CapEx assumptions, we decided to go at quite a high level. So actually what you can see on the screen is that we already selected a specific legal entity. So it will be Brussels. And we have our 4 different simulation scenarios also grouped here. And you have the result of your depreciation in a table on the right-hand side. So for the demonstration purposes, let's say that I'm planning to have an investment. So I'll be having a CapEx for my reference in machinery and equipment. So here I will be planning 800K of investment. So I have an automatic table, which of course I need to manage in my admin settings, which tells me that for each type of the asset, I have my useful life in years. So for this asset, it is 10 years. And insert this date, I need to select one of the suggested values. So we also try to automate this to make it more user-friendly, so that there is not a lot of errors. So knowing that we have already 4 months of actuals available, the system will only suggest the remaining of the year in terms of the months. So I can start as from May 2020. So in this case, let's take June. I will save it. I will save my inputs, and I have already my monthly depreciation calculated. But I still need to run my calculation procedure to see the spread by month. So you can see it here that for my reference simulation scenario, my new CapEx starting as from June is 6,667 euros per month. For the existing CapEx, this is of course what we have already, and this is equal for all of my simulation scenarios. So I'm not adjusting this one. So it would be enough for CapEx to show you a little bit how this works, and we can go further to our other assumptions. And here you have the remaining assumptions for the P&L and balance sheet. Again, my Brussels legal entity is selected, and you have the working capital assumptions. That's the first table. Underneath, you have other P&L assumptions. So it is mainly the interest on loan and the tax percentage. And finally, you have the final table the final table on the other balance sheet assumptions, where mainly you have the change in other current assets, different loans, and change in equity. So I will update my drivers to, so this specific procedure will already copy paste different values into the scenario based on, generate the right baseline with the latest actuals available, or it all depends how you define your baseline. So in this case, we have our baseline updated based on the latest information we have. And we have already some pre-population of tax if it doesn't change. I have 4.3% of interest on loan for my L-curve scenario, because for L-curve scenario in June 20, I decided to contract a loan of 1 million. Yeah. And then for my DSO, DIO, for example, and DPO, I can use baseline values. So 58 days, for example, for my DSO. I will be saving that, and I will finally look how my balance sheet is looking like. Of course, before even starting, I will generate my balance sheet, because I made quite a lot of different assumptions so far in the previous screens. So let's generate the latest balance sheet, update the figures. And you'll see also on the screen that my legal entity Xbike is selected, and also my simulation version reference is selected here. So that's important to take into account. So here I have my visual representation of my specific balance sheet line, which is cash. And I see already that I have some issues with my cash, because I'm ending the year with -1 million of cash, which you can also see, by the way, here for December 20 simulation, so -951. So that's already a very big issue that I'm currently facing. And underneath, you can see also different metrics, balance sheet metrics, such as return on equity, on assets, current ratio. So this is also allows you or helps you to monitor your liquidity performance, and if you need to change any other drivers, and you finally have your working capital in million euros as a visualization. So for the purpose of the demo, I will maybe try to correct my cash position with different assumptions. So I will go back to my balance sheet assumptions. And to correct my cash, of course, financially speaking, you have different options. And I think that's also a very good way of using what-if simulations and scenarios, where you try to see the impact of different possible options to increase your cash and to ensure the liquidity. So one of the options could be that for the reference scenario, I would contract a specific loan at a given interest percentage. Another option is that I will try to monitor very closely and control my working capital, so my day sales outstanding, and to try to improve these indicators. So let's forget about the loan, and for the purpose of demonstration, try to adjust some of these working capital assumptions. So for my days sales outstanding, after having investigated with the related teams, I know that I can manage to do it at 45 days. Similarly for my DIO, and for my DPO, I'm still able with my contractors to pay at the 45 days as well. So I'll be saving my assumptions, go back to my balance sheet, refresh again my balance sheet based on the latest assumptions. And let's see how my cash position it has been impacted so far with the latest drivers I have updated. So now the cash position is looking much better. So I'm ending the year with 2 million cash position. So you can see it in a report. I'm ending with 1.6 million. So is it enough? Is it not enough? That's the purpose of discussion and iteration. So for the purpose of this webinar, let's stop at this level because I see that we are running already of time, and let's look how our cash flow is looking like. So I will again generate my cash flow with the latest assumptions I made. And by the way, what you see in this specific report, so there is not, so now you see the cash flow for all of the legal entities. So I don't have my Brussels selected anymore, which of course I can select, but in order to show you the visual representation of the all movements by country, let's look at the total level. So what you can see here is, of course, the monthly report of my cash flow. You can see back our 800 capex investments for the reference scenario that we have planned. We have nothing, almost nothing in financing activities. Underneath, you have a very high level representation of my net cash, so the total movement of the year for each of the scenarios. So for the reference scenario, we end up with 15 million, which we can find back our 15 million in the table here. So at the total level, 14.97. And you can also find the movements here by country. So I find back my 15 millions here, and then you see the contribution of each of the countries. And finally, you can also have you can have an overview of my ending balance by country. So that's really my ending cash position by country as well. So we see a very healthy cash position, except for Germany, where we are ending almost at zero, and also a big alert for France, where we have 0.4 million negative in cash position. So we need to discuss further with France to review our assumptions and to make further plans. And that's also the benefit of this simulation exercise, is that based on the assumptions, you can already see at the end of the year if the business will be healthy, if based on our strategic decisions and targets, do we have any constraint on that perspective or not, and we are able to be more prepared. So in case that everything really happens, we could adjust accordingly. So finally, I will go to my simulation summary so that we can see in a very let's say summary visualization of all our simulations so far. So you will see in a dark purple color all the P&L lines. You also see in green color all my cash flow lines. You'll see my cash beginning of the period with the cash increase decrease. So this is our movement. So recall again, for my reference, I had 15 million for the year, and finally I'm ending with my cash ending balance here for each of the simulation scenarios. Of course, I can look at a legal entity perspective. So let's look at Brussels, since we made some adjustments in there. So we made indeed a capex investment for our reference scenario of 800 kilo euros. We made a loan. We contracted a loan for L curve of 1 million. So all the assumptions we made for the P&L, balance sheet, cash flow, you can find it back here in terms of the summary. And the good thing about the simulation is that once we have our recent actuals already, next actuals already available, and we see the trend that it will, the reality is more moving into the V curve or more into the long-term recovery, then we can quickly take back our reference of L curve as scenario simulation and feed it to our next forecast and start as a start as a baseline for our bottom-up forecast exercise, for example. So that's the value of the simulation. I hope that with these 50 minutes, I was able to give a very quick overview of, and also in some terms, a quite high-level overview of the full financial planning of the 3 financial statements for the simulations. And please, if you have any questions, we have now still 4 minutes available for any questions you will have. Okay, no questions so far. Very good. I will also remind you that we will share this webinar at the end of the session. And in case you are interested in any other application of this X-Bike module, such as forecasting, budgeting, long-range planning, or some reporting, or some specific areas, please don't hesitate to contact us, and we will be happy to organize another demonstration and webinar on this specific particular topic. All right, I see that we don't have any questions. In that case, thanks a lot for your attention, and have a nice day. Bye-bye.